After the inflation numbers came out, the market took a little bit of a dip. Let's talk about what's going on this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite Market webinar. Now, if you want to get the most up-to-date, unbiased information on the stock market, then make sure you hit that like and subscribe button down below. Click the bell icon to get notified every time we upload new content here on the channel, because you are not going to want to miss what is happening in the market this week and next week. So let's talk about what happened. So we had the job numbers come in on Friday, and everybody was happy. The market was happy. Everybody was happy. The market went up, up, up and away until we got to Thursday. And then the inflation numbers and the CPI came out. And even though they weren't like super bad, they were worse than anticipated by about 0.1%. So not a huge miss as far as expectations are concerned, but it was worse than expected, so the market did react, and it was a very volatile last couple of days. If you were watching the market, we went from red to green to red to green. It felt like every hour. Now, of course, it wasn't that dramatic, but it was very tough to trade, especially on Thursday and Friday, as the market really topped out. Now, if you're into candlestick patterns, you will notice that as a topping hammer there, but we don't typically play those types of things. But yeah, definitely the market did start to come back down after we started coming back up here towards the 50 moving average, and we are still in that nice downtrend that we have been in since, about the end of July. So, these temporary bounces are normal. We will see this even when the market is going down. I mean, let's look. We can look back. It didn't take us that long when we were at the all-time high here back in 22. And, even when we're in this long downtrend, we would sometimes have periods of up, and then it would go down and then back up and down and up and down. So this is pretty normal, even when we're in an uptrend like we were here from about, October of last year up until, this July. We're in a pretty solid uptrend. But even then, there were times where the market would sell off and then rebound back higher. So now what we're seeing is the opposite of that. Now we're selling off. We're rebounding, but then we continue to sell, and we don't get back to those previous levels. So in a very solid downtrend on the S&P 500 right now. And this week, we start earnings. Now, we're going to talk about what earnings we're going to be keeping an eye on here in a minute. But let's keep this party rolling. Let's take a look here at the breakdown for the S&P 500. So what was going up when we were in this nice little uptrend, and what kind of followed the market? So mostly tech and communications really followed the market very closely, as they are kind of the front runners this year. And, we've talked about this before. If they dip, then, it'll take the market down with it. So, these were kind of running really well into Wednesday, and then definitely turned over with the market on Thursday and Friday, as did consumer discretionary. But one that didn't was energy. Energy continues to pick up, even though we had this dip here that dipped pretty hard. When we had that nice downtrend here, this nice push down, we see energy kind of following that. But even when the market was going down these last couple of days, energy has been going up. So that's something we'll take a look at here. Those other sectors that are just kind of floundering, that are below the zero line, didn't move too much. Healthcare and financials are basically neck and neck, really kind of hanging together for the most part. And real estate, consumer staples, and utilities all just in the dumpster, for lack of a better term. So really having a hard time, pushing these sectors back up. Of course, there's a lot of talk about real estate right now, especially in the commercial real estate area, that, could be an issue coming into next year. So we'll have to wait and see, but definitely down almost 7.5% on the year so far. Real estate really taking a bit of a hit as far as that concerned. But overall, the S&P 500, represented here by the SPY ETF, up 12% on the year, 12.25 actually. So, these sectors really propping up the market, doing a good job holding those gains, even though we are in a slight downtrend going into Q4. Talked about energy perking back up, and that is mostly driven by the price of oil. Now, of course, everything going on in the Middle East right now is going to really have a impact on oil. And of course, we kind of touched on this last time. We're not going to get into politics on this webinar, but oil definitely getting a bit of a boost here with everything going on in the Middle East. So With that conflict, that is about as politically, religiously, and emotionally charged as I can think of, so I am not going to touch that today. But oil pushing up here nicely going into the weekend, closing at 87.69 per barrel for light crude, excuse me, and a huge, huge rebound in gold here. Whatever prompted this sell-off here has found the bottom, found support at 1820. So really nice support there. Massive bounce back in there, going up almost over 100 points actually from the low that we had here on, it looks like the fourth or the fifth. Yeah, the fifth looks like the bottom. So really big run up back here to gold where we were before, actually, just towards the middle of September. So quite the meteoric run in gold here. Again, no position in either of these. I know we talked about this the last webinar, that maybe we might consider a position, but so far nothing in that to discuss. But something that has been very interesting is the bond yields just really ramping up, especially the 30-year and the 10-year bonds really getting some gains this week. And at one point, the 30-year was actually right neck and neck with the 2-year, which has been in the lead for pretty much all year. 2-year bonds have been higher than the other two. So we've been seeing that inverse bond yield curve that Riz has talked about before. And then the dollar just continues to run, taking a bit of a breather here this week, but ending the week strong, well over the 100 mark on actually 106. So making a very big push here going into the end of the week. Now let's take a look at the key dates in the market this week, and then we will take a look at the earnings calendar. So we've got a couple dates, really only one of them that matters. Retail sales on the 17th, building permits on the 18th. No one really is going to take that as much of a catalyst. This, however, is going to be a catalyst. When Powell talks, the market moves. That is my motto, and I'm sticking to it. So we are going to have that on the 19th, and if I'm not mistaken, that is Wednesday. So be prepared for that one because the market is going to move when that happens. Other than that, those are the only 3 catalysts this week. We've got stuff coming up the week after, but we'll talk about that on our next webinar. So keep an eye on the market on the 19th because that is going to be a volatile day whenever Powell talks. Things get moving. Now let's go ahead and look at the earnings for this week. So we're starting off Monday with nothing. Let's just call a spade a shovel here. That's what it is. But Tuesday, things start getting a little more interesting. Of course, Riz in a position already in Johnson & Johnson, so that will be a key earnings date for him and anybody who in Elite has followed us into that trade. A couple coming in after market close, nothing really too interesting. We got United here. Lockheed Martin should be interesting given all of the conflict going on around the world, so that could be something to keep an eye on. But Wednesday, we're going to get some big names. We've got Abbott in the pharmaceutical area. That's a big one. And then we've got Tesla and Netflix after close on Wednesday. So those are 2 that are definitely going to be big movers. We should see some interesting things happen with that, so we're going to be keeping an eye on there. If you're into dividends, AT&T, of course, used to be like the big dividend stock. Not so much anymore, but Taiwan Semiconductor, TSM, that one is going to be interesting with everything going on in the South China Sea. That one could be an interesting one to keep an eye on and see how that behaves. But nothing too exciting for the rest of the week. So those are the ones that we're going to be watching more closely. Let me know down in the comments section of the video what you're going to be watching this week as far as earnings is concerned. Are you really into railroad stocks? You can be looking at CSX and Union Pacific, or maybe Snap-on Tools. That was always a favorite of day traders back when I was doing that sort of thing. So let me know down in the comments. I'd love to know what you guys are watching for earnings this week and what is on your radar. Now is our time for all of our Elite members to post their questions, and I ask everybody to do this ahead of time because, well, when you're with Chris and Risen here, we hit it pretty hard. So Jeff was saying he's noticing quite a few analyst price upgrades headed into earnings seasons. Is that anything worth noting or just noise? I think it's mostly just noise for the most part, Jeff. These analysts are, it's no different than me saying that my profit target is higher on, Eli Lilly or Tesla or Apple or something like that. Now, of course, these analysts will, have a little bit more weight than I would in the market, but not too much. I wouldn't put too much faith in what they're saying, but it is an interesting phenomenon to keep an eye on. if people are thinking that the market is going to continue up, and they're trying to kind of maybe inflate their own positions, is that maybe the case? I'm not going to point any fingers or say that's what they're doing, but it is possible. And Jeff also says that he's considering a long in SQ, very low, near the lows back in the 2020s. So yeah, let's see here on SQ. This one was a favorite back in the day. Let's get back to. Oh yeah, yeah, we are nice and low, aren't we? Okay, so here was the low. Let's put it on here for everyone to see. Right about there. All right, so SQ used to be riding high and flying high, but not so much anymore. Now it's Block Incorporated. Used to be Square. And okay, so this one gives strong option premium. So that could be something that you could definitely cash in on. Let's see when earnings are coming up on SQ. Looks like on the 2nd of November. So you've got a couple weeks. But yeah, definitely we are getting pretty low on SQ, and honestly, more so than I think. I think that's rather undervalued for this stock, for what they offer. But obviously investors may feel otherwise. I think, this could be a very interesting long position, or if you want to play the options game, that's an option as well. I get it. So right around 41 looks like where we have some support from earlier. So, if you want to try and push that up towards the 50s, that's a very nice risk reward. If you keep your stop maybe around like 40 or so, if you want to do that sort of a thing, that could be a good idea for you. I don't think I'd let it run all the way down here to 32.50. That seems a bit too much of a gap in my opinion. But definitely I like SQ. I always have, and I think it's a pretty decent stock. Let's see how earnings have been. Looks like they did pretty good as far as that's concerned. Basically, beating expectations. Looks like we missed here. How bad did they get beat down? Not too bad. So even if they missed just a little bit, it's not too bad. Revenue is looking pretty darn good, if you ask me. Any company that can make $4 billion seems pretty decent, in my opinion. So, yeah, I mean, with earnings coming up, that definitely could be a catalyst. But like I said, you've got plenty of time to try and ride it back high. Of course, if the market continues to sell, if you look at these candles, you'll notice that it's very similar to the S&P 500. So if the market continues to dump, I think SQ will kind of go with it. But if we get a rebound, definitely could be a possible long position for you. And if you don't mind holding, then playing the options game, always great as well. Nikhil wants us to talk about a short on TSM. So we mentioned TSM with earnings coming up here very, very soon. That would be Thursday. So be aware of that if you're going to try a short. If you are going to short this thing, do not hold it through earnings. That is my advice as far as that's concerned. From a technical standpoint, looks pretty decent. I would say that we kind of broke out of this downtrend a little bit. We did kind of breach there pretty hard when the market was ramping up, but a very nice rejection here. We've got a lot of, downward pressure on this. We're down below the 200 simple moving average. That's a big thing. We kind of crashed through the 50 like it wasn't even there on Friday. So, definitely a possibility, but this is going to have to be a very short-term short if you're going to take it. I'm not going to say one way or another whether you should or you shouldn't, of course, because I'm not going to give you financial advice because we're not here for that sort of thing. Yeah, I would make sure you close that thing before, if I'm not mistaken. Oop, wrong button. Let's see. That is Thursday morning when TSM reports. So I would not hold through that. Excuse me. Wrong button. There we go. So yeah, if you're going to take this on, say, Monday, if we see more downside in the market and this continues to go red, make sure you close that thing before Wednesday at the open, or at the close, excuse me. So cover that position if you get it into profit. Do not try and hold it through earnings because you can get absolutely wrecked on earnings because this thing likes to gap. This thing likes to jump hard. The last thing you want to be doing is holding it short here at, say 90, something like that. And you wake up the next day and it's jumped to 97 because, of course, they are open earlier than we are because of their time zone. So, yeah, be very careful with the short on this one. I don't think it's necessarily a bad play, but very, very risky with how this stock likes to move. It likes to jump, and it likes to jump a lot. Now, that can work in your favor, obviously, because if it dips hard and you get that gap down, maybe let's say Tuesday morning or something like that, that could be really profitable for you. But RSI is, pretty much right here in the middle, sitting right around 50. In theory, you may see some resistance or support, excuse me, on this downward trend line. So if we get back towards that area, I would be ready to take it off. Honestly, I wouldn't ride this thing short more than a couple dollars, and then I would close it if you want to do that sort of thing. That's me personally. It could work out very well for you, but yeah, I would make sure to close Wednesday before the market is done because you don't want to hold through earnings, not with a short. Anytime, buddy. Glad to give you my opinion on that. I mean, from a technical standpoint, I think it looks okay. For a short, we're below the major moving averages, so that'll help you as far as applying some downward pressure to the stock. But mostly, I think if we kind of look at this run up that we've had here in this rollover, kind of matching with the S&P 500, if the market buys up, a lot on Monday, and we start to see more of a rebound from where we kind of ended on Friday, which was on the downside. So if we kind of see something like this, that could be bad for a short for you. So just be very, very careful with that because, again, earnings on Thursday. That is not something I would want to hold through. So, well, awesome. We got this done in like 20 minutes, guys. I really appreciate each and every one of you coming out. Have a great rest of your weekend, everybody. Thanks for coming out, and we'll see you in the market on Monday.